Hello everyone, and welcome back to the channel. Today we're diving deep into the world of European economics, specifically looking at the European Central Bank's upcoming meeting. What can we expect, and what does it mean for all of us? Let's break it down. The ECB is set to meet on December 18th, but don't hold your breath for any big surprises. The overwhelming consensus is that they will keep interest rates exactly where they are. The central bank seems to believe its current monetary policy is in a sweet spot, effectively balancing the economy without needing immediate changes. They're in a wait-and-see mode, carefully observing how things unfold. So, if no rate change is expected, what's the big deal about this meeting? The main event will be the release of the new economic forecasts. These projections are crucial because they give us a glimpse into the ECB's thinking about the future of inflation, growth, and employment in the eurozone. Back in September, the staff forecasts were already pointing towards some potential upside risks to inflation. If these new forecasts are revised even higher, it will make it much harder for the ECB to justify cutting rates anytime soon. In fact, it reinforces their cautious stance. A higher inflation outlook would essentially raise the bar for any future rate cuts. The ECB's primary mandate is to maintain price stability, which means keeping inflation under control, ideally around the 2% mark. If they see signs that inflation could be more persistent or stronger than previously thought, their priority will be to keep policy tight to prevent prices from spiraling. This means the idea of a rate cut, which would stimulate the economy, but could also fuel inflation, gets pushed further down the road. Now, what about the long-term view? Based on the current trajectory and the expected cautiousness from the ECB, it looks like we're in for a long period of stable rates. Our analysis suggests that the ECB will likely remain on hold not just for a few months, but throughout all of 2025 and even 2026. The economic landscape simply does not support a move in either direction just yet. The economy isn't weak enough to demand a rate cut, but inflation isn't yet fully and sustainably defeated to a degree that would warrant easing policy. So, when will we see the next move? The real turning point might not come until 2027, and surprisingly, the next move might not be a cut, but a hike. If the economy eventually strengthens and inflation pressures build up again as a result, the ECB might need to step in and raise rates to cool things down. This is, of course, a long-term projection, and a lot can change between now and then, but it highlights the underlying risk that the battle against inflation isn't completely over. In summary, the upcoming ECB meeting will be all about the message, not the action. Expect rates to stay on hold. Pay close attention to the new forecasts for clues about the bank's future policy path, and prepare for a prolonged period of stable interest rates, with the next potential move, a hike, still several years away. Thanks so much for tuning in. If you found this analysis helpful, please give this video a thumbs up and subscribe to the channel for more economic insights. See you in the next one.